Peace and blessings, everybody. Young Nas from iGotOptions LLC, and in this video I want to talk about what stock market indexes are and why they're important. So, for those who don't know, stock market indexes are just a collection of companies on the stock market. That's all they are. So, but the thing about them is, like, they can be traded on the stock market, just like a regular company on the stock market. So basically, if you trade an index, you're basically trading a collection of companies, as opposed to just trading one or investing in one. You're investing in an index, which is a collection of them. Just basically like chips. Like if you go to a family gathering and they have those boxes with the Fritos that nobody be getting at the bottom of the bag, like those, it's just like chips in a bag, but they're companies in a bag. No, I'm just playing. But yeah, those are what indexes are. So now I gotta have to explain what the three main indexes are, because I think there's multiple indexes, but there's three main important ones. So one is the S&P 500, and the S&P 500 is an index that literally is just a combination of 500 different companies on the stock market. And the NASDAQ is a collection of companies on the stock market that deal with technology. That's what's special about the NASDAQ. They deal with technological companies, or most of their companies are technological or technology related. And now the Dow Jones, in my opinion, is probably one of the most boring, but it is very important because it's the 30 largely public. It's like one of the. Let me take my time. The Dow Jones is the 30 largest companies in the U.S. It's something along those lines. It's either the largest traded companies in the U.S. or just the largest companies in the U.S. in general. So that's what the Dow Jones is. So now, why are these indexes important? These indexes are important because they can affect multiple companies at a time. Why? Because they're collections of companies just set at an average price. So yeah, that's also another thing that's important too. These indexes are a collection of companies, set at an average price. Like they take all those, company prices, all those company share prices, and then, set an average price so that people can trade them, invest in them. So you're trading. That's how you trade in multiple companies at a time, through indexes. They are important. So like if one of those indexes tank, then the companies that are part of those indexes are going to tank as well. Or when I say tank, drop. Their price is going to drop. And if the indexes rise, then the companies are going to rise also. And these indexes are important because these are what, like when you hear me say the market or the stock market, and I say, oh, the stock market's up today, those are typically that's what I'm referring to, the indexes, because they have such a large amount of important companies. They represent the economic position of the United States in a sense. So that's what when you hear me say, the market's doing well, or you hear other people say the market's doing well, that's really what we're referring to for the most part. So that's the importance of stock market indexes, and those are the three most important ones.